Hi, welcome to our session about conviction capital. And I have a fantastic panel here with me. I would like to introduce Dimi, David, Bastian, and Anis. They will also introduce themselves. They have different backgrounds, but they are all in Web3. They are also globally. So we are here in Germany, and I think it would be fantastic to understand the global perspective and also how they see the landscape, the investor and VC landscape for the future. So let me just ask a question to each of you, and I would like you to introduce yourself. And with the question, how is your private conviction regarding investment, and how do you express that? How do you execute on that with your VCs? Who would like to start? Dimi?
Yeah, happy to kick it off. Thanks very much. Hi, I'm Dimi. I'm partner and chief investment officer at Outlier. Outlier is a pretty active player in this space. We are 11 years now investing across different themes, categories in crypto, Web3, blockchain. We have been pretty early with a lot of investments, like before anybody was talking about AI, blockchain convergence, deepen. We've been placing a lot of investments early on. Have a portfolio of 400 companies. Myself, I'm since 8 years in this industry, background aerospace engineering. I was working a lot with complex systems, so I'm pretty excited to be investing in this space. I would say my personal conviction is, being now 8 years in this space, is that we're not questioning anymore if this technology makes sense and why we need this. I think it's pretty clear that this technology, cryptocurrencies are here to stay. But now it's really all about not anymore being early in a technology to be investing, which was the risk level before, but really about now growing your fundamental thesis in different themes, going deep into like fundamental analysis, projects that solve a problem, that have the ability to onboard users, to generate revenues. So I would say over the years and cycles, conviction is always there, but the conviction of the conviction basically changes from cycle to cycle that you need to adjust for.
Yeah, a quick intro from my side. So my name is David. I'm founder and partner of Dracoon Ventures. I actually live here in Munich, so if anyone wants to grab a coffee, you're from TUM, I'm always happy to meet you in person. I've been in the industry for, I hate to say this, but it's more than 25 years. Not as an investor. I actually started my career in VC, in Web1, prior to the millennia even. To diss myself, worked for a company called T-Venture, which was the first corporate venture capital company in Germany. And so I have kind of like the opportunity to see the historical development of Web 1, 2, and Web 3 right now. And my personal conviction is basically, I had a colleague in 2013, his name is Volker. He was part of my team, and he said in 2013, yeah, let's do Bitcoin and so forth. And it's like, can we please go back to work and leave me alone with this Bitcoin crap? And now here we go. And so it's basically getting my personal salvation of having missed Bitcoin back in the old days. So here I am.
Thank you. Bastian.
Hey, pleasure meeting you all. My name is Bastian. I lead the investments of the CV Labs Accelerator. So CVVC, CV Labs, we're in a early stage fund based out of Switzerland. We run offices in Zug, but also in Lisbon and Cape Town. We have a vehicle also focused purely on the African continent, where we see a lot of adoption and a lot of use cases as well. And so I got into crypto because of CBDCs, so the very traditional route, because I always wanted to have legal tender, and essentially if you have your bank, or if your money with the bank, it's not legal tender, you don't really own it. And so for me, like the ownership and that innovation was a big topic, but then obviously didn't really take off. Private markets are faster, which is why I then went into VC to see the adoption of stablecoins, and I think this is also what we've been investing in over the last few years. So we wanted always to invest in more applications and use cases to change industries, and I think we still want to, and it's happening now. It's a good feeling. It took a while, a lot of obstacles, but we finally got there.
Thank you. Anis?
Hi, everyone. Glad to be here. My name is Anis. I'm an investment associate at Greenfield Capital. We're a European-based crypto-native investment firm, how you like to frame it. Typically, people say VC. And we're usually investing seed Series A. I personally, or my personal conviction to join crypto back in the day was more like we had the internet, connectivity, etc., and now we have this trust layer for the internet. And this still stuck with me. And nowadays, I feel like we have to come to this point, which drives my conviction, where we onboard the next big user wave that doesn't really think about that they're using a product which is built on crypto or blockchain rails. They just use it, and that's in the background. So this would drives my conviction nowadays.
Thank you. Now I would like to ask the audience, who of you is a founder team, or maybe wants to found? Oh, that's a lot. Okay, good perspective. Who is an investor here in the audience? Only 1, 2, 3, 4 more? Okay, thank you so much. So what we would like to also understand the challenges in general, what is changing. So I would like to start with Anis. How do you see investment in fundamentals? You already talked about in the fundamentals in blockchain. How do you see that in comparison to moonshots? And yeah, what's a good balance here for a VC?
Yeah, I think it's not a contradiction, basically. It really depends on the stage. I mean, if you pre-seed seed, I think the guys from CVVC are a little bit earlier than we are, or Outlier Ventures, then obviously you cannot have many fundamentals. So we're a little bit later, and we mostly look for the possibility for fundamentals to be there in the future. So I think it's not contradictory, it really depends on the stage. And the later you are, the more fundamentals you can obviously kind of observe. But the market is still highly irrational, so we don't really know. Sometimes there are things pumping for no reason. But we did some research and kind of saw like some deeper research with our data team, and saw that especially in times where the market is not too crazy, bear markets where there's not too much volatility, fundamentals start to kind of matter more and more in the token prices. So therefore, and that has always been our thesis. We always try to look for good fundamentals. Not thinking it's contradictory at all.
And what do you see as a next big shift in fundamentals? So what do you see as the next wave to invest in? What are you looking for?
Next wave in fundamentals, what am I looking for?
Or in general, in blockchain, what are you looking forward to invest in?
Yeah, I mean, in general, looking for more, that's fundamentals, demand side, right? So I focus a bit more on Deepin and consumer at Greenfield, and back in the day, Deepin was typically, there's someone, they build a network, they have a bunch of supply, no one's really using it. And I think now the future Deepins that should be coming, they should solve this demand side first, get some fundamentals, get some traction, get some demand, and then kind of slowly use the Deepin, build the Deepin side around that.
Mm-hmm. If someone else in the panel wants to answer that or add on to that, please feel free to jump in.
Yeah, maybe also to your first question on like, hype versus fundamentals. And I mean, we're like super early stage, so we also need to know, okay, what's going to be big in the next, like, whatever, like 3-4 years that maybe is not big yet. And so, as an anecdote, also had a coffee chat with the accelerator team from A16Z, because I think a lot of acceleration programs also work together. And I told them, like, yeah, for us, it's always like we need to figure out like what are going to be the trends, what are like bigger investors looking into, because there needs also to be capital for our early stage investments. Whereas like if you're A16Z, then you can also steer certain trends. And the answer was like, yeah, actually not so much, only like 50%. And I'm like, okay, if you can steer like 50% of the trends, that's basically almost all of it. But that's just a side anecdote. And I think fundamentally, what we look at, or at least that's my personal opinion, like not a lot has changed since sort of like Bitcoin, in a sense of like it really works for ownership, for transfer and ownership of value, which is why we have a lot of adoption in the entire financial industry. But also if you think of meme coins, et cetera, so the entire financialization of the space, then it's also a coordination of a network. So Bitcoin being one of the largest, if not the largest computer in the world. So it does a really great job in incentivization and coordination of people, which is also why we see adoption in DP networks. Not quite sure yet if you're there on the demand side, but for sure the supply side is working. And then the third pillar is sort of like cryptography, so public key encryption and a lot of innovations on there. That's also why we see a lot of innovations in programmable cryptography. When you look at CK, FHE, we just had a talk on obfuscation. And so I think these are the fields that are fundamentally driven by blockchain and innovation, and this is where the talent is. And I think there is a lot of new space to explore.
I also heard you talking about robotic and blockchain, which is not a fundamental, but it's more like a bet, right?
Well, I mean, at the moment we haven't done any bets on robotics and blockchain, but of course, VCs always look for new trends, new hypes, and it seems like the intersection of crypto and robotics these days is quite a field. I mean, there was just a round of OpenMind, 20 million, first round, some of the biggest investors in. I mean, personally, not sure yet. I mean, robotics is still a very early field, so maybe you first gotta solve the fundamental issues of robotics before you apply crypto incentives and economics into this field. But I think people always try to find new fields, new hypes. I think this is also where, I mean, a lot of tokens performed in the past because you can build a nice narrative around it. But I think that's changing. People want to see revenues. People want to see true adoption and long-term plays. So I think, you know, we've always been cautious, and we always wanted to look into deals, you know, that actually generate revenue and sustain.
Obviously, yeah. David, I know that you are also, let's say, your approach regarding, you know, to evaluate projects and startups. I know you are organizing also hackathons, accelerators. I think right now something in South Korea. So how does that support your, let's say, deal flow?
So we might be a little bit different in terms of our investment thesis and approach to investments, in that we don't have the bandwidth to have a 50 plus or whatever portfolio. We're operating an investment DAO, which is like more like a syndicate. And so like the first deal we did this year was a deal into an RWA company, and we actually advised them first. So because we invest, advise, and we accelerate, and through the advisory we kind of were able to build conviction, because we know that those guys were not token scammers. They were in for the long run. They had a very sustainable, cash flow positive Web2 business, and now we're helping them going into Web3. So they're really there's a good approach. It's a good blueprint for us. And so I think for us, it's a little bit like advisory first and then invest, as opposed to like a spray and pray approach of potentially other people who operate a very large portfolio, which we could not do, as simple as that. And so in order for us to kind of like mitigate the risk, we like to advise first, or we like to accelerate first. We see deal flow, we see the teams, we interact with them. Are they in here for the long run, or are they really like just only here for just dumping a token, etc.? So that's really an issue for us to kind of like understand the people behind the teams and the projects.
Thank you. Dimi, where do you see the biggest shift in investment landscape in Web3? So regarding traditional VCs approaching the market, and how the startup analysis are changing over time?
Yeah, good question. So what we're seeing at the moment in the market is there is a structural shift in the market. It's never been easier to kind of build in Web3. There are so many, off-the-shelf products, SDKs. AI helps you quite a lot, and we see an enormous like issuance in tokens happening. It's growing exponentially, and so what happens is basically attention is very much fragmented in the industry. Liquidity is fragmented, and it's not everything going, you know, like everything up and down. So it's becoming quite hard also for us to be investing in and understanding to cut through the noise, because it's quite noisy. But what we believe is going to be happening now is a phase of consolidation, where there's going to be a phase of, you know, new type of M&A structures, token merges, some sort of partnerships, where the whole industry will kind of consolidate within all these different categories, you know, like deepen, DeFi, RWA, AI. But within those, there's going to be a lot of subcategories, and there will be evolving category-defining leaders. And new ones that are challengers that will be coming and trying, you know, with some cutting through innovation to kind of winning these subcategories. But we'll move into this sort of like consolidation phase. And what that means is basically the winning projects will be the ones that have, you know, distribution, well capitalized, growing really like user bases, generating revenue. You see this sort of hype at the moment, how Hyperliquid, Pump.Fun, Athena, how much revenues they produce, and then there's this new metric, revenues per employee. Like these sort of like new kind of fundamentals and metrics will be evolving. And I think traditional VC is entering the space, and they also applying their own metrics that they know from like traditional venture capital investing and due diligence. For some of the areas, it's quite difficult for them to really value how to evaluate in layer 1 or layer 2. Like leave it with the degens. Like the younger crypto native VCs, they know how to value this. But there are other like projects and areas like Deepin where the unit economics are, you know, like the industry experts, energy, telco, like you know how to value those, and traditional VCs and asset managers know how to value those. So I think it's quite interesting because we'll see this sort of institutional money flowing into the industry, because also projects will become more measurable and like measurable and easier to assess them from like an asset management perspective.
Do you think that the approach from, let's say, traditional VCs entering the market of Web3 is something that is, you know, how could we grow that? Because I think money is needed. So do you see an opportunity to, you know, bring more VCs into the space?
I would say it's not venture capital needed. It's going to be the broad band of like just capital into the market through different vehicles. You know, we need a lot of hedge funds, you know, that can purchase those liquid tokens that enter the market. We have a lack of liquid funds at the moment. Because you see kind of like the on-chain capital is quite stagnating, that are able to purchase these like tokens coming to the market. So you need more money, more like professional liquid money to flow in and kind of like move the price in the industry up. Traditional VC, yeah, it's needed. I would say we don't have much problem of like venture capital money. There's still plenty. As I said, liquid funds, but also other sort of like vehicles, like, you know, the digital asset treasuries that might kind of like start becoming more creative, how they bring new type of funding through debt vehicles and whatever. Yeah.
If anyone wants to add to that, feel free to jump in. If not, I continue with David. So was there an investment that you did in the past where your conviction was really challenged? So, and how did it work out? So was there anything where you thought, okay, I believe in that, but it took really a long time? Do you have a story to tell about?
Yeah, I mean, that is why we have a different model, is because like in previous investments, I mean, the most important skill set a VC has to have is judgment. And obviously we are also wrong often, and very often. And we just, you know, have a different or a wrong assessment of the team. I can tell one story. So there was a team of 3 people who won a hackathon. The due diligence was brilliant, and they looked smart and like energetic, and then we signed the deal, and about 1 month into the game, you kind of see that something is not going well within the team, and they don't know each other. Number one, they were all, so it was like 2 guys knowing each other very well. The one who was the CEO was not getting on with the other 2, especially with one guy with whom he had like a battle of who has to say in the company. And so that was something that you cannot find out in the due diligence. The beauty contest was perfect, but then again, once you see the longevity and you see the team cohesion, you see the dynamics within the team, it just blew the whole thing. And then they just got into a fight, and the one guy left, and then he had tokens, he had shares, etc. And so obviously this is something that you cannot foresee. And that's why, I mean, there's no recipe for me, because I was like, oh my God, I was so sure about this deal. But at the end of the day, it just blew up, you know, and there's not much you can do about it other than potentially trying to get to know them a little bit better. And like for me, one of the major learning in that case was really to have a good team cohesion. So, and I think that's also important for you guys if you are building a company, that you lay in bed with someone that you know for a long period of time, that you can go through like a lot of deep shit trouble, and you're not, you know, doing, you know, you're not ending up in a fight. I think that's one of the most key important success factors is team cohesion, that team that has done it before together maybe and has worked before, as opposed to just have met on a hackathon or something like that.
They're endless from a venture capital perspective. When you have 400 portfolio companies, there are a lot. But 2 examples that again, like one is more technological, the other one is more like team related. So during DeFi summer, when everybody was basically investing like DeFi 2020, we did one investment back then. It was Aoki Labs, spatial computing. And back then, you know, like the use case was so niche. It was like AI doesn't have eyes. And for AI to work in like it from a geospatial perspective, it requires like spatial computing, the data inflow. And for the future AI to really work, you need decentralization. And so spatial computing need to be decentralized. So many risk levels. Like back then, AI was not hyped, right? You didn't know when the timing will be. Spatial computing on top as another risk level was crazy. But we did the investment, you know, like we tried to kind of like stay within our thesis, cut through the noise of like DeFi summer, everybody just purchasing all these like fruit tokens that were evolving back then. And now they're basically, now we see this sort of like robotics hype coming into the industry, and they're like the second best capitalized project in this field in Web3. So that's one, which is like stick to your thesis, and trust your gut feeling, and the founders like really build their relationship and try to understand what they know better than you. The second one is really more like regional perspective. We have been investing last year a lot in Latin America, and a lot of the projects and founders great, and the projects that we are seeing, there was no like cut through kind of like technology. It was, you know, like payment infra applications, neobank type of projects. And the difficulty was like, okay, there's nothing innovative. Okay, you changed your application, you add this feature, you add a savings account, so what? Anybody else could do that as well, right? But then I called a couple of people in Latin America because I wasn't on the ground, so I tried to understand the market. And the interesting fact is basically there you need to be the rock star in like owning and winning the distribution in like these regions. It might be a very simple app, but you need to be rocking it. And you know, the founders that we had were, you know, they were like the podcast stars there. So it's again, it's like not much from a technical perspective innovative, but really the strength be elsewhere, like the distribution that you also need, right? It's just in the different life cycle of the project.
Nice. Bastian, I think you also have stories.
I mean, a lot of things already said. No, I just also wanted to add that we also had the discussion before on like, you know, if you build a company, it's a long-term game. It always takes a lot of time, a lot of conviction. And so it's not like that you cash out after like 2 years usually. So it's like, it's taking much longer, especially if you're building more in deep tech. And so I think you also got to have a passion for the project and not just like move on. And I think for us as an investor, it's also always important to see, okay, it's like how passionate are the founders to actually solve the problem? Because I think there is always like a lot of setbacks, you know, on the journey. And I think this is certainly something that we also look for, because we've also seen founders that were building for like a year, it didn't work out, and moved on to the next project. And so I think this is also something that we try to look for, because it's never been easy to build a company, unfortunately.
Anis.
Yeah, I have 2 stories that kind of aggregate all this stuff. So my first investment was like a quest platform, like the classic. You do a quest, you get some tokens for it on the customer sides, like big projects that want, you know, on-chain tasks to get some traction. And it was in 2022, and where this stuff also wasn't super hot back then, I think. But you know, big infra plays were more interesting, seemed more sexy. But I don't know. Our thesis, our conviction was, yeah, you know, actual product, actual revenue, actual customers. Sounds pretty good. And then we invested into a team, and yeah, as soon as the crypto winter hit, they were like, nope, we're not doing this anymore. We need to do some other Web2 product. Although they had enough funding to kind of go through the whole cycle and then, you know, keep going. And we decided to invest into them because we also saw a competitor that was called Layer 3, and it was heavily funded, and it had, but the multiple, you know, revenue to FDV just seemed way better than the ones that we invested into. Long story short, the guys, they stuck together as a team and tried really hard, but with different products that we had no conviction on. It was like Web2 products that have been done in a way better fashion. But we still kind of were, I mean, we supported them, but since we didn't have the possibility to kind of get exposure to what we initially wanted to get exposure to, we approached the Layer 3 guys, looked at the fundamentals a couple of years later, and yeah, the multiples seemed suddenly very good, very attractive entry price. And these guys just have been building, and you know, had more revenues. Token price was a bit down, or like just above, just above the last round. So suddenly it was a very good entry point into a project that we wanted to really get exposure to, or into a vertical, and we really had conviction in. On the other side, I also have another example from our portfolio which was interesting. We invested in a team that did, back in the day, ICO market making, and then they kind of pivoted away to different ecosystems, like because the ICO bubble, of course, bursted, and they went to, I think, Avalanche, AVAX did searching there. After Terra Luna, also these alternative ecosystems kind of died down, and there was not much money to be made. But we really believed in the team, and we really liked the guys, and we were like, okay, these guys are going to cook something up here. And suddenly this is one of the biggest winners out of our portfolio. Now they're one of the largest block builders in Ethereum. They did the Titan builder. And yeah, so I think the most fundamental and most important is actually the team. And also them just not being kind of, you know, tourists and turn out of crypto the first second and just try harder.
Thank you for these nice stories. So maybe there, all these founders here in the audience, maybe that is something that is motivating you. I hope so. So I would like to continue with another aspect. How do you see the opportunities for Web2 companies and institutions to enter and to implement Web3 technologies? And yeah, like we see with stable coins and digital assets, etc. So what do you see, where do you see the opportunities?
Well, I think I also worked in a big corporation for over 6 years, so I know how big corporations sometimes can work in Germany. And I also know that there are like people in the strategy department, or CEO gets something, watches TV or YouTube and sees something, forwards over to his guy or his whatever, and then that person is the, you know, poor person that is kind of doing the research project on this one and so forth. So I think there's going to be a lot of that happening from institutionals that kind of hearing that crypto is not a scam anymore. There's true value, there's true business. that can be done. And so naturally, big corporations now, even Google is planning their own chain, which I personally find, yeah, it's good for the industry as a whole, but on the other side, like a big corporation is doing a blockchain. Does it feel right? You know, it feels kind of strange to me, right? I mean, yeah, it's permission and like maybe it has, I don't know, like 10 validators, or maybe it has 100, but it probably controls 100. I don't know. So it kind of feels like that. And so there's going to be a lot of push from the institutional side because people are having just FOMO on the corporate side and just like, you know, trying to figure out there's a new technology coming. McKinsey has put out a report. Geez, we got to do something. Yeah. So this is definitely happening. And so, I mean, so that's a little bit of a pessimistic view on that push. Whether will be like true innovation coming out of it, I at least hope that there will be potentially also new capital, as you mentioned, that we need more capital, more people who are kind of like dealing with these issues. So overall, I think it should be good because there are more people, more legit people dealing with it. Whether it's going to be like truly meaningful business coming out of corporations, I have my doubts.
I would rather say industry experts to go out of the large enterprises, try to come in. They know the industry well, like especially deep in, we see plenty of examples. They come in, you know, like we as a VC, we can't know the energy space, the satellite sector. Like they come in with their own industry expert. We help them come into like Web3 and think different and help them on the economics, whatever. They need to come in, honestly, disrupt their own industry. And I think there will be then opportunities, most probably through this sort of like institutionalization phase, that there's going to be again like this sort of like acquisitions happening in the future. But I would say, I mean, in the West, I would say they're more disruptive and more faster in integrations, like Robinhood with Robinhood chain, Google chain. Like if it's ethically right to have their own chain, something else, and if it makes sense. But I think more from a European perspective, we're still very slow.
I like what you just said about the experts from the industry. I just had before our panel a conversation with Alex. So I think this is a call to action for you, maybe not only for you. Are there anyone else? Maybe Alex, do you want to, because you already raised your mic.
Yeah,
Want
I mean,
to add
just a
to
small
that?
point to add. I don't think it's that dire. I think institutions or corporates are also a great customer for, let's say, independent data that is generated. I mean, there's a lot of geospatial data, especially. So I think that it's very good that they actually create demand and use the products. But yeah, just random crypto project because there's some hype that they're going to implement, and then just as soon as the market goes down, abandon is not the way. But I see them as a huge demand driver.
It obviously depends also on the size of like corporates, right? Like smaller companies, they already use today decentralized computation because it's just much cheaper. The larger that you become, when the more difficult it becomes with, you know, like the board to explain them, oh, we need to touch your crypto, you're gonna get rewarded in crypto, and you need then to kind of like handle it on exchanges, whatever. But the smaller you get, the easier. And there are plenty of solutions already where, you know, the decentralized part is much more efficient and cheaper.
And I think it's also a bit of a clash of like centralization, decentralization, in a sense of like big corporates and TradFi companies never like really cared, but now it's eating away their margins. And so they have an incentive to also implement, for instance, stablecoin payments because it's much cheaper, and they fear that other companies then will offer better services. And so now, because it's eating away the margins, what are you gonna do? You're gonna build your own L1 or L2 where you have extra revenues. You're for sure not gonna build a decentralized sequencer because you also make like whatever 80 million a year with sequencing, like Coinbase does as well. And so I think it's this constant clash on like how much of the revenue can you own, like what are your margins. And I think now, I think it's actually a good sign that they actually feel a threat on their margins, meaning that like the technologies is actually better. And it should be the technology that the financial space is using. And so yeah, I see this as a development, but also from a venture capital perspective, now it's become tougher to invest in the space because they themselves have big R&D teams, they're doing a lot of work. And so it's more difficult to sort of like invest in new 0-to-1s in that specific field. And especially because the bigger fintech firms already own the distribution. So it's more like them buying up the infrastructure that allows them to offer those services. So this is sort of like what we're seeing.
And it's, by the way, sorry to interrupt you, it's a new investment model in our space where new investment firm, smaller private equity firms, they evolve. And what they basically do is they buy Web2 companies, put them on blockchain, Web3 rails, sell them. Because they make them more efficient, you know, then the unit economics make sense again, the margins increase again, they become more profitable, and then they, basically the value of the companies increase.
New business model.
Well, it's already in, like not with us, but others are doing that.
Mm. Yeah. I think we are coming to an end, and I would love to just have also an outlook, because we also want to talk about what's next. So what do you see what's next for your industry, let's say in the Web3 space? What is the next, let's say, big topic that is coming up that you foresee, that you would like to invest in, or you wish would be more drive into? What do you see? Anis, do you want to start, or Bastian, you already?
I can also take it, so I'll leave you a bit more time. We're just joking. So I think, so a field that I look into is programmable cryptography. I just like the field, and I think, look, I mean, we need more verifiability. I think there's a lot of interesting innovation coming. I think the entire AI space is also evolving. We're gonna see probably like more and more agents. I think it's still gonna take time. But then the question is also, how are the agents gonna access your data? And so I think there's two things. One is, how can you verify that the agents did the right computations on siloed data that is private, which is also why we invested in that field. And then the other part is, agents are not very good at keeping secrets. So if they access your private data, how can you make sure it's gonna stay private? So you also gotta encrypt the data. Probably we're gonna have a blockchain as a settlement layer for all of that. And so I think these are fields that I look into when it comes to verifiability, privacy, and all of those parts. Reality being that at the moment, the AI researchers mainly care about cost and speed. I think that's also reality if you talk to the people from you know, DeepMind and so on and so forth. So, but I think it's gonna come, because I think it's gonna be more and more crucial. I mean, honestly, I use Claude Code myself to do some stuff. And I'm actually worried. I also saw people getting hacked because, I mean, they have full access to your servers plus full access on the internet, and you don't really know what's going on. And I think there we need more cybersecurity, privacy, verifiability, and I think that's a big field for programmable cryptography.
Thank you.
Yeah, so the way we look into it from outlier perspective is we try to understand how the next iteration of the internet is going to look like. We've built our own thesis, what we call today the post-web, not anymore Web3, not Web4, the post-web. And it's going to be basically our belief that between the humans and the internet, there's going to be the agentic layer. And then we try to break down what it takes to build a truly agentic internet, a more like verifiable, trustless, permissionless agentic internet possible. And we have, you know, broken down our thesis and into the areas where we need to be investing in order to make this sort of like post-web function. From there, I would say it takes time, because, you know, like a lot of projects are already building in this phase already, but they, you know, it's quite difficult because today you still build it for a user, but tomorrow you actually your go-to-market or your distribution might not be the user anymore, but an agent, right? So that's the way we look into it. We go, you know, like we call it again post-web. You can download it on our website. We've written like over 100 pages. And that's how we kind of like place our investments at the moment.
Super interesting. And I think also identity plays a role there. I think you are also investing in it, Anis, right?
Exactly, yeah. Stuff like WorldCoin, etc. I mean, there's also some other competitors coming out. And back in the day, I feel like all this like online on-chain identity stuff was more like a play for degens showing off their NFTs and their history of transactions. And now it really matters that we can prove what did a human, how was it done, how, I mean, identity on that part, and also on the side of how was it computed in the end. For that, we invested in Archium, for instance. I think the guys are also here. They have a confidential compute layer on Solana, and I think it's already used, I don't know if I can say it, but like by some hospitals in the field of federated learning. So they kind of compute on different patient data and kind of share the model outcomes in a trustless manner. So these are 2 points I think we'll do.
Yeah, so rather than talking about the what, I think I completely agree. Those are really hot issues. For me personally, one of the, I would say, insights of the last 3 years working with entrepreneurs was that in Web3, I really feel that the majority of teams are trying to build a project as opposed to a company. And that's a very big difference. And so I would like to see more teams who really deeply think more about a problem and a willingness to build a real company that solves this problem, as opposed to a Web3 project which launches a token and then you get rich. So those are very, very different things. And the majority of teams that I have seen so far are actually on the, I want to build a project, I want to launch a token, but they never really, come to the point of thinking about at least why do I want to build a company? And I think those are very, very different things. And so I've also been an entrepreneur myself, so I've not only worked on the investment side, I know how hard it is to build a company. It is very hard. And in Web3, the longevity is an issue. I see many people just, at the first pivot or second pivot, they just don't last. And obviously, you have a fiduciary responsibility with the money that's been given to you by investors, because, they give that money because they are actually given money from LPs. And so, obviously, that fiduciary responsibility is something that they would like to appreciate with you having placed their money into you. So that is one of the key insights for me, that I would love to see teams that want to build real organizations.
Thank you. And you already answered the last question that I want to ask to all of you with a very short answer to the many founders here in the founders or future founders here in the audience. What would you wish from them and their founding teams? What would be a call to action to them? If you would have a wish free.
Delete your socials. No kidding. Honestly, it's quite hard as a founder to navigate through the crypto industry because it's so noisy, and usually you get distracted quite a lot because like hype is very cyclical and it's jumping from one topic to another one and to another one. It's distracting founders completely, and you're like, oh, damn, should I now integrate this feature, or look what they're doing it and our competitor? Just delete it. Just cut through the noise, believe what you're building, find some good partners like here on the stage that are on board as an investor, but also as a partner. Like an investor is not just, there are investors that just give you capital, but there are investors actually that are there for the long term. Just try to find those and stick to what you're doing best, which is, build your breakthrough technology or your breakthrough product. About the company, I don't know if I agree too much, but that would kick off another 30 minutes of discussion. So again, cut through the noise, really, just concentrate, just focus on your signals, and don't get deconcentrated with just, the degens on chain playing with the money, gambling around. That's
okay. Thank you, Anis, and then Bastian.
Yeah, I guess one advice would be just build products for users. And for the next wave of users that maybe don't want to go through the pain of using a MetaMask or Phantom Wallet and learning a lot, but just using the product. And I mean, keep coming to events like this. I think this is great. I think especially when we think about Europe versus US or Europe versus Asia, other ecosystems, they have a lot of universities, a lot of strong founders. And I think this is one of the few student-run places that has such quality of builders and people. So yeah, just keep coming here, meet co-founder, and reach out if you need some capital.
Bastian?
No, I'll keep it short. I think build products and not features. I think that's also what we've been seeing quite a lot. Yeah, So you have the entire company top to bottom, which is not easy to copy, build sort of like lock-in effects, network effects, et cetera, so you can sustain a company in the long run as well, and have fun at the conference and meet a lot of interesting people.
Maybe also on your conference in 1 week from now in
so
Zurich.
If you want to come to Zurich, 2 weeks, CV Summit.
Next chance.
Big thing. Working closely also always with the people at TUM, so that's cool. Very nice conference here as well, much appreciated. Yeah, so spend a bit of time in Europe. There's a lot of interesting people around.
So thanks a lot, and to all of you, maybe this is an inspiration. Also reach out, connect with them, and yeah, build. Thank you. Oh, there's a question. Do we have time for a question? Yes, we have time for one question. Oh, for two? Yeah.
One question. Questions though, so we don't have time for two? Okay, so I do the crypto question then. So I'm leading a liquid fund in Asia, and one of our biggest internal discussions we have currently is what is the implication, in your guys' opinion, of like the current going on digital asset treasury implication for the underlying asset moving forward at the point it comes down to doing due diligence on those tokens, like the Solanas of the world. Next week there's going to be an Avalanche one. Yeah.
I'm not sure I understood the question correctly. What the implication of
the implication of that moving forward on doing due diligence on the underlying asset.
So overall, I can give you a bit of that. We don't know exactly those digital asset treasuries, what sort of like risk add-on or actually, you know, risk of potential they have on the kind of like liquid market. Right, and again, like there's a lot of like social rumors. You know, what's happening is there's quite a new tool for like the crypto market. It's not a new tool for like the typical stock market, like those sort of SPACs, and so it's existing. We know them already. The difficulty with those is basically at the moment it's kind of like very simple. You know, like they issue shares, they buy those tokens, and then you know like stock price is quite volatile. I don't know if I exactly answer your question, but you know, I think the difficulty with those stats is at the moment is like what happens if you know the market moves into any direction, let's say into the downside. Are they adding basically risk because they need now to start unwinding those treasuries and then push the price even further down, which would basically be disastrous for the market? Because you see a lot of ownership in those digital asset treasuries at the moment. I think like it's over 5% of ETH is basically being owned by debts at the moment. But at the same time, in the future, it could be also that new capital is flowing through different structures, as I said, debt structures, that they don't need then to kind of like start unwinding or whatever. They have, you know, depends also on the mandate of those debts. If they have flexibility to manage their treasuries, that they are then able basically to kind of like decrease even the amplitudes in the market and like kind of counterbalance sort of like directions. So on the due diligence side, I don't know exactly how to answer that, but in a sense, I think. Bitte? Yeah, correct. A big one at the moment, right? I would say a big one. And that's why, you know, like we are also quite unsure, like the sort of institutionalization phase, what that means, and then where the direction is going to be.
A round of applause for our panelists, please.